Hello and welcome to another AMA with Yield App. Today we have another exciting announcements and some more new developments to discuss with all you. I have Lucas Keeley, our CIO, and Andrew Lamb, the head of structured products. How are you guys going today?
Not too
Very good,
bad.
thank you. Yeah.
Akash, good to see you. Yeah.
Yeah, good. With the market pumping above 22K, with Bitcoin above 22K, and we see some more strength in the new year, which is a bit unexpected, but always a pleasant surprise. We appear to have found potentially a robust floor for the short to mid-term. Everyone's getting excited, and we're all starting to sing some bullish tunes. It's kind of important for everyone to take a step back and assess the greater macro environment and the ongoing issues, and just take some caution into what might be some bigger factors which might come into play later in the year. But back onto more important matters at Yield App. We have this AMA is going to be 100% dedicated to structured products and digital wealth. We'll have future announcements and developments and discussions about Haven One. The big news is that Yield App has acquired Trophy Group, which is a platform that offers structured product solutions for cryptocurrencies. The founders of Trophy Group have a combined experience of 30 years working on derivative deals desks at HSBC and JP Morgan. Will be it's which is great news because they'll be joining Yield App to build a best-in-class crypto structured products and meet the same rigorous standards as their TradFi counterparts. The key thing is that this offers 4 new structured product strategies to Yield App's product suite. And this with these products, we can create the type of investments and that meet the specific needs of each investor with a customized product mix. They'll enhance people's yields. They provide some capital protection, and they can also trade a little bit with leverage, just depending on the risks they want to take. I think I'll pass it on to Lucas Keeley, our CIO, and we can just talk a bit further about what's all happening here.
Thanks, Akash, and hi everyone. So we late last year we were at a conference and we ran into the Trophy Group, Andrew and colleagues, and they were looking to essentially provide structured products to our clients, and we thought, well, we want to build this, we want to do it quickly, but we'd like to manage all these things in house, mainly for a lot of counterparty risk reasons and etc. So we chose to sit down with them and come to an agreement to acquire the business and integrate that into Yield App. Andrew's been in the markets and trading structured products on the currency side at HSBC. And I've never had a glowing reference from a guy who I've known at HSBC for a long time from anyone, and Andrew was the first one I ever got, so I was quite pleased that we'd made a good decision. I'd like to introduce Andrew to you all. He's running the structured products trading business for Yield App, and I'll hand it over to you, Andrew.
Yeah, thanks, Lucas, for the introduction. I really appreciate it. So, a bit of background myself. I worked in HSBC, as Lucas said, for over 10 years as an FX options and structured products trader. So, my responsibility there was to run the option book for the bank. So, basically, was managing the option portfolios for the bank. So, I've been working in Hong Kong and New York offices. So, I got experience in different markets, from G10 to emerging markets, so from Asia to Latin America. So we've been working with, providing structured product solutions to hedge fund, institutional clients, like corporate clients. Like we also got a very strong franchise in the private bank and high net worth individuals business. So it's exactly the stuff that we're doing in Yield App here. So I left the bank in 2016, 2017. I ventured into cryptos. So as I see the opportunities of I think crypto back in the days, a lot of arbitrage opportunities and stuff like that. So I used to work in the bank is kind of come up with all these strategies. So I started a fund to do these kind of arbitrage strategies. So I mean initially it's actually pretty simple, like all these like spot arbitrage across venues, but by the time we build more complicated strategies like interest rate futures arbitrage and some of the correlation arbitrage as well. So it was pretty good. I think we made over 100% per annum per year until I think 2021. I think the market getting more competitive. More people kind of put money in the market. So we see like compressing yield and stuff like that, the return. But also obviously we got a big bull market by the end of 2021, and there is a lot of projects providing unsustainable yields. Like, I mean, obviously UST from Luna, paying 20% of thin air. So at the end of the day, we look at these things, it's so unhealthy in the market. And at the time, the market doesn't really have a lot of structured products offering. So these products can actually provide these kind of yields with sustainable and legitimate way for the client to earn it instead of the money just putting out thin air, right? So we decided to start a platform, build TroFi, where we can offer these products to our customers, to bring these products from the traditional finance to the crypto world. So here we are, join the U app, and I'm excited to bring these products to our community here, and happy to answer any question on structured products and trading. Thank you.
We're very glad to have you on board, Andrew. Most of us lost a lot of money on BitMEX, and it shows what a real good trader can do with these kind of market conditions. And I think it'll be very exciting to build these new product offerings with you. Lucas, I'm sure our users are going to would love to hear more information about how this acquisition came about and what this really means for Yield App and what kind of stuff will be offered.
Yeah, absolutely. So as our community knows, Yield App is about offering clients access to yields. And I think we've always tried to offer some of the best yields in the market on the different coins that we accept. And we also chose not to loan out client coins or coins at all. And this kind of forced us down the road of, looking at market neutral strategies like arbitrage, the different types of arbitrage, be it, triangulation, integration, liquidation, etc. And I always felt that the yields that we offered were quite anemic, given that, my background for 15, 20 years has been designing, cross-asset structured products for global markets, for, the biggest wealth management firms in the world. And, when I looked at what we could be generating in structured product yields, which to me are a much sort of cleaner way of achieving sort of, high double-digit yields, I thought, well, is the market really ready for this? How do we want to build it? And obviously running into Andrew and his colleague in Singapore and sort of fleshing something out and being able to get it off the ground straight away has been fantastic. Why is it interesting? Well, the thing that I find quite difficult to address is the counterparty risk in the market and the things that you have to do to generate returns or yields outside of you either go into lending and staking and liquidity provision strategies in DeFi or CeFi, or you end up having to trade arbitrage cross venue and then you take on the counterparty risks there. So one of the things that we thought we want to do is to build more diversification and greater amount of strategies from there. And when you have a structured products business, you are generally in the business of issuing volatility to the market. And once you do, you build inventory in that space, then you have the ability to start building out a broad range of products that you otherwise wouldn't be able to do unless you had to go out in the market and source it in the first place. So for us, adding this is super exciting for the where we want to go. Tim and I sat down 18 months ago and said, right, this is our roadmap, and the acquisition of TroFi has really accelerated where we want to get to, not just from a structured products perspective, but from a wealth management perspective, and also bringing a greater array of product offerings to our clients. So yeah, I'm pretty happy with this. There's some stuff that we want to add on top of the 4 that we're launching today, which is, hopefully we get some good take up, and then we can start building out a greater suite of products. So yeah, thanks, Akash. That's all.
Thanks, Lucas. It's going to be very interesting for our users to have a look at what we're building and the type of investment portfolios and the mixes of the mix of strategies that we can offer. I understand that there's a blog post which has already gone out which users can have a read of in terms of giving a base understanding of what these products are, as well as the opportunities that will present themselves. Lucas, are you able to kind of elaborate on the type of these structured products we're offering? I note that there's four have been mentioned previously, but is there something more information that you can go into?
Yeah, no, absolutely. I think the first thing I would say is with structured products is they're really bespoke products to design for clients that have different risk appetites. Like our own platform is you've got one risk appetite, and we've always assumed the lowest common denominator risk. So if you're going to have all these assets and you're going to move them into the same strategies, you want to be a low risk strategy. But some clients, as I've always maintained, have a higher risk threshold, and some clients have a low risk threshold. And what I wanted to do was be able to offer products to our clients based on their risk thresholds. Like the one of the most interesting things from a regulatory perspective in the way we assess risk is that if you're a cryptocurrency holder, you are considered in the highest risk, like your appetite for risk is extremely high. And so if your appetite for risk is extremely high, we can structure things that actually reduce the risk. We can structure things that actually increase the risk. We can actually structure things that are aligned to your market view. So if you think the market's going to be sideways, how do you generate returns off of that? How do you control your own risk better? How do we educate our clients to control their own risk better and build kind of tailor-made solutions to risk appetite across our community? And there's so many different choices in the way we look at structured products. So obviously you can be fully protected. So you can have like a capital protected product. You can have kind of optimization solutions, which are really designed for investors who have, moderate to high risk tolerance, who just want to get more efficiency out of their portfolio in flat markets. We've got performance solutions, which are obviously designed to really benefit from directional bets. And for those who've got super high risk, then obviously leverage is obviously something that might be of interest to them. But ultimately, the products that we're launching at the moment, which are, the dual currency, which is a kind of staple in currency markets, the range accrual, which is when you want sort of looking at something in more stable markets, you can accrue yield based on markets trending within a range. We have a shark fin, which is based on a kind of directional view. And we have a target, which is a product designed around a level in the market that you're comfortable with. But the names of structured products generally reflect their the shape of the payoff in the profile of that product. So there are obviously a lot of things that we can build on top of this, but the basics that we start with, obviously the shark fin is directional, the dual currency, which is efficient, optimization, range obviously is what it says on the tin, and target, which is based on a view. So the broadest differences, if I really want to break it down in the most simplest form, is risk appetite and market view. If you believe that markets are going to be stable, obviously you want to accumulate yield as much as possible, because you're not, if you were to track a normal distribution of outcomes in asset prices, then you're picking a piece or a part of that normal distribution curve and saying, I want to earn in this range. And because you've given up the returns in the outside of that range or outside of that particular area on the normal distribution, you get paid for that. And that's where the yield is generated from. It's like, I don't mind missing out on all of this upside, but I want to earn this much from this product, or I want to protect all of this downside. So the payment for that is I'll give you some of this upside and I'll just play within this sweet spot. So there's lots of ways we can look at this. So so each scenario based on your risk appetite and probability of the event happening generates the yield. So ultimately you're saying, what is the likelihood of this event happening? And the risk-free market neutral price and the arbitrage-free price will give you a yield based on the volatility of the underlying. and that's how we price. And so you can get yields out to triple digits if you're taking huge risk, and you can get really low single digit yields if you just want to just trickle along and have more control over the way you earn on your portfolio. So yeah, I mean that's I think is the best of an explanation I can give you, Akash.
Thanks, Lucas. We've had a question come in, so we might as well just take that one. Perhaps Andrew, you could answer this one. What's going to be? Will these products be available to every customer, and is there any limits attached?
Yeah, I mean, sure. Thanks, Akash. Yeah, the product will be available to every single Yield customers that you already register on Yield app. You can actually download the Trophy app and register your email. You will automatically get KYC, so you can access your product. These products, we do a minimum of $10, a maximum of 100K for now, and obviously depending on the demand for the product and customer feedbacks, we can change it in the later days.
I think also worth adding that for those who have a relationship manager and are going to be part of the digital wealth platform, then obviously there's size questions that we can talk about as well. So if you really want to do a product and go through the sort of relationship management that you have, then there's a way of dealing with a bigger size if you wanted to.
Yeah, absolutely.
Fantastic. And sorry, Andrew, you were adding something else?
No. Good. I'm good.
Great. So this all sounds very enticing for our users. I think there's 4 which you guys mentioned that we would start off with. What about for the future, Lucas? Is there more plans to build on this, or what's kind of the roadmap look like for Trophy, but also any other product that may be added on?
Well, there's more structured products than I have fingers and toes and different names, and ultimately the growth of the platform is a function of how quickly we can get the educational materials together so that all our users can understand the risks associated with a particular product. Obviously we'd like to add accumulators. That's obviously a big staple in Asia for Asia clients. We'd like to add buy rights, which are really interesting from a Japanese client perspective, and an Australian client's perspective. We'd like to add maybe some correlation products with both BTC and ETH. We can add some worst of, some best ofs, some rainbows. There's lots of different things that we can do that really are just a function of education, risk management, and modeling. We've started with 4 basic, well-known ones. If people want really bespoke stuff, we can do that too. Between Andrew and myself, we've done this for the majority of our careers, right? We know this stuff bread and butter, right? So it's not an issue. But ultimately, we've always been community driven with the demands and the requests that we want. So if there's particular payoffs or particular risks that people want looked at, then obviously we would look to address those in the expansion of the products we have.
Fantastic. Thanks, Luke. Sorry, go on, Lucas.
So I was just going to say, and obviously the thing that people are going to want to know is how do we get access to it, right? So obviously there's an Android app which can be downloaded, and the iOS app is coming soon. Ultimately, it will become part of the Yield app platform, fully integrated as part of digital wealth and the overall platform. The app can be found from Android on the Structured Products tab of the website, so people can just log in and go and get that. And we've really tried to make this as seamless as possible. We have tried to bring this to market as quickly as possible for our clients because that's where the demand has been. And the Yield app users can log in with their Yield app account without needing to complete KYC, as Andrew mentioned earlier. So yeah, there we go.
That does seem very convenient for the Yield app users. And I'm sure our customer service team will assist with any onboarding and future questions that people may have. It is, it's acknowledged that it's not the easiest product to understand, but as a cryptocurrency market and the blockchain landscape does advance in the future, these are things. It's good to build these things out inside Yield app rather than having other other competitors to beat us with a punch and take more market share. We've had another question come up, which is will the higher risk offerings jeopardize the assets of the lower holders? Essentially asking if by increasing the risk profile of the company as a whole, affect the terms of default or bankruptcy. And Lucas, Andrew,
That's a great question, right? And I think I'll answer this straight up. The difference between earn and structured products is that the risk is with you as an individual and not with us. So you are taking the risk to generate the yield on your underlying assets. So when you say, I want a dual currency deposit or a dual currency investment using your stable coins, that risk comes back to you. So the 20% is not 20% capital guaranteed. It's 20% if XYZ scenario doesn't happen, right? And these are the things that users should go and understand, that there isn't a commingling risk problem with structured products. There is an individual risk problem that users need to understand and be aware of the risk associated with the payoff that they're looking at.
Well, I think ultimately, the structured product that we're offering at the moment, it depends on your view and depends on your appetite. It can be reducing the risk overall to your portfolio. It doesn't necessarily increase the risk with structured products, right? I mean, you can actually make some conservative investment in the structured products, depending on, say, for example, the dual currency, depending on the buy level you set, you can actually have a pretty conservative yield generating product, instead of like really increasing, the risk of your overall portfolio. So obviously it doesn't necessarily, increase the risk for our company as well.
Fantastic. Thanks for the clarification, Lucas and Andrew. I think that makes a whole lot of sense, and that should alleviate the concerns of people using the platform. We previously had a question relating to the YLD incorporating in TroFi. So YLD will not be incorporated into TroFi. However, in a few months, when structured products are in the Yield app, your Yield membership tier will give you a higher return, as it does with the all Yield products, especially for the Diamond tier members, high APY, high returns when you use structured products. So it's a significant benefit for any Diamond tier or any YLD token holder. I think that might be it for questions, unless we've missed something.
There's a few others, so let's talk. There was one where what would Yield app actions would be in case of a loss in those higher risk products. Our actions are to provide access to the products and give you clients or users the education materials for them to understand the risk associated with those products. We aren't giving investment advice and saying to people, hey, go and do this, go and do that. But what we do know is that users have a view on the markets, and if they want to generate yield based on that view, these products will allow them to do so. These aren't capital guaranteed products, right? This is 100% yield guaranteed. You're going to get this back and happy days. This is, if this scenario plans out the way you think it will, then this is the yield you will get. If this scenario doesn't happen, this is what it will cost you. So you're trading or you're exchanging one risk for another to generate yield. And that's the best way I could to explain it, is that if you don't like some part of a payoff, like let's say just draw a normal distribution curve, put a line down the center and say, right, this is the expected value of my underlying. I believe in the next 3 days, 10 days, 6 weeks, 10 weeks, whatever, that this underlying asset will be around this level. And I'm willing to give up anything beyond that level, and I'll pay for it with it cutting off everything below this level. And what you end up with is if you were to draw two straight lines of where your range is or what you're happy with, that's your sweet spot of where you get your yields. And everything outside of that is where your risks sit. So you've got to understand where's your sweet spot and where are your risks, and understanding that in crypto markets, where the tails of a normal distribution are a lot fatter and a lot more skewed to the downside, that the risk is far larger than it would be if you were trading bonds or some sort of blue chip equity markets or broad indices. So we're looking at individual specific risk cryptocurrencies which do have a high risk of move and volatility, and that's why the yields are quite attractive. So hopefully that answers your question, Zerg Hunter 68.
Thanks, Lucas. There was a question about customized strategies, and the user mentioned, I think Cesar mentioned, will there be a customized strategy which embraces YieldApp's view of the market? Andrew, since you're a bit of an expert trader and can usually, it appears you can, beat the market at every turn. Will there be any customized, the Andrew Lamb strategy, or something you want to make up for the users?
Yeah, I mean, like that would be the plan for going forward. But I think at the moment, we basically want to introduce these products to our community, and all these facts, all these risks to be out there pretty clear to our community, and they can understand the product and started to invest in it based on their risk appetite. I mean, I think we're not in a position at the moment to kind of give investment advice and stuff like that. But I think going forward, some of the digital wealth products is going to come up, in a fund structure, then it might happen.
And just to add to that, right, as we mentioned in previous AMAs, we are launching our own fund vehicles, and one of those fund vehicles that we're looking to launch is the YieldApp View, like a specific YieldApp directional strategy that people would utilize all the different methods of generating returns as part of our digital wealth platform. So that's definitely something that's on the radar and something we are looking to utilize, and adding structured products is the first step to us being able to provide a much broader suite of investment solutions to our clients.
Okay. Thanks for the information, guys. I think that's all the questions that we have on YouTube. Look, just want to remind users that there's a new from the YieldApp website. You can go onto the structured products link to learn more about each of our products and download fact sheets. There's videos on each product available on our YouTube channel as well. I'm sure our team will guide you if you have any questions, and if you want to more information about us, the strategies we run. It's all very new for most people in the blockchain landscape. So it should be a very interesting process all along. Just the customers can download the app directly from the Android app. The link can be found in the Structured Products tab. Any other final thoughts, Lucas or Andrew, before we log off today?
The first thought I'd say is to all clients that want to use them, make sure you go through the educational material, make sure you understand the risks associated with each product. It's something that I've always said to people is that structured products allow you as an individual to be a lot more empowered in the way you manage your own risk and your risk appetite. They do come with some, downsides that are all mentioned in our materials. It's not just a regulatory thing, right? I've been through GFC, as so has Andrew, and we've seen people using structured products in highly risky ways and losing everything they have, and then saying, I didn't know. And if you haven't understood the materials, then you probably shouldn't be using the products. It's really, really important that you understand the risks. You really try and make sure that you've got all over the details, and I think that's the most important thing. They're not difficult to understand. They're pretty easy when you think about the profile that you want, but just make sure you understand them and don't be afraid to ask questions if you have any.
Yeah, I think Lucas pretty well said about it. I think a lot of people just look at the risk of the product and say I think when, for example, Bitcoin at 60,000, they think Bitcoin going to 15,000, 16,000 is never going to happen. It could happen, right? So I think the investor needs to understand the volatility of the market, understand the worst case scenario of the market, and what will bring to the payoff from the structured products. I think that's the most important thing.
And we also have a all this information will be provided on the Knowledge Hub on the website. We can provide links to that later on as well, but just check it out if you can, and a lot of good information there. Anyway, thanks Lucas, and thanks Andrew for your time. I think it's going to be a very exciting journey forward with TroFi. That's everything from us today. We'll talk to you guys soon on Discord, Telegram, or any other social media platform you guys use.